Welcome to the deep dive. You know, if you're a professional driver or maybe an owner-operator right now, the whole atmosphere, it's not just high stress, it feels, chaotic.
It really does. We're stuck in this extended market downturn. Freight demand is kind of cool. Spot
Yeah.
rates have sunk.
Right, but the costs,
Yeah.
diesel, insurance, maintenance, those high-interest loans, they're still astronomical.
Exactly. It's a real pressure cooker out there. Every single cent of margin is just getting squeezed. So today, we're going to try and cut through some of that chaos.
What's the mission then?
Okay, so we want to look at the market volatility,
Right.
yeah, and the regulatory environment, which is dizzying, frankly, and these new paths people are talking about for, like, truck ownership.
Okay.
But really, above all that, we want to synthesize this stuff, show you how to maybe build a personal financial shield against all this industry uncertainty, clarity, stability, respect.
Yeah.
That's the goal.
And that idea, the shield, it's crucial. It means you got to see the whole picture, right? Like, industry folks, Hervey at Life as a trucker, they always stress this. Look at every story from all angles.
Mm-hmm.
You've got the shiny corporate pitch, Then there's the maybe noble goal the regulators have in mind.
Right, safety, clean air.
But then there's the driver's reality,
Ah,
the immediate gritty stuff happening on the pavement. So we've looked at recent news market corrections, regulatory clashes, new fintech for ownership, carrier awards, and some really critical training and labor issues.
let's dive into that economic 1-2 punch that you're probably feeling right now. Wall Street might call it an extended correction.
Yeah, easy for them to say.
Right. But for a lot of owner-operators, the sources we're seeing show it's just a fight to survive. Freight volumes have cooled off quite a bit.
Which creates this painful oversupply of trucks. And that pain is really personal. We're hearing from drivers, they're literally saying they're running just to avoid losing the truck.
Oh.
For a lot of people who jumped into independence during the boom times a couple years back, that dream of ownership, it feels less like freedom now and maybe more like a high-stakes financial trap.
Yeah, the winners and losers are pretty clear right now. Shippers, the big fleets with contracts, they're doing okay, enjoying lower freight costs, consistent volume.
But the small to mid-sized guys, the owner-operators, they're losing their shirts, losing their margins, sometimes losing the whole business.
And this low-rate environment, it gets compounded by that second punch, regulatory uncertainty. So you're fighting for pennies, basically, while trying to figure out constantly shifting rules.
Yeah, the intentions behind the regulations often sound good, right? Safety, cleaner air, we all want that.
Sure.
But the way it's executed often leaves the driver feeling like a guinea pig. Like all this talk about emissions rules,
Oh, yeah.
pushing drivers towards what? $400,000 electric trucks? That's a massive, massive expense.
And the charging infrastructure, it's just not there yet. In so many key lanes, it's barely there.
So the uncertainty itself becomes a cost. That's fascinating. If you're a small fleet thinking about upgrading,
How do you invest? How do you drop $150,000 on a new diesel truck if you're worried some state rule or a future federal one might basically make it obsolete in 3 years? You can't.
no. So you end up running older, maybe less efficient, more costly equipment for longer, just because you don't know what's coming.
Exactly. And then there's a labor classification fights. AB5, for instance.
Right, that whole independent contractor versus employee thing. The idea might be worker protection, but for owner-operators, it feels like a huge threat to their flexibility, their whole business model. It could just jack up costs overnight, potentially kill the independent model altogether.
And the mega carriers, they can afford compliance teams, lawyers.
Yeah, they just hire people, the small independent. They often just exit the market, the margins collapse, and that's it.
Okay, so market's brutal, regulators are unpredictable. How does a trucker find any stability?
Well, that brings us to some of these new ideas around ownership. There was big news recently with Biller, right? A fintech startup.
Yeah, they secured, what, $335 million from the Less Group?
Specifically to try and make truck ownership easier for independent drivers.
And their pitch, it goes right after the pain points of those often really predatory lease purchase deals we hear
That's
about.
how.
They're talking ownership via installments. So you skip that huge $150,000 upfront cash hit.
That's appealing.
Very. And they bundle services, insurance, maintenance, even delivery support all in one platform. It sounds like a smooth path to, real independence.
Okay, I appreciate the optimism, but look, given the history in this market, why should we think Biller is really different from a standard carrier lease purchase, even with all that money behind them?
That's a fair question.
Doesn't that huge pot of cash just mean they have more power for, like, aggressive repossession if the economy tanks again?
That is exactly the critical skepticism needed. If you're a driver looking at this or any similar program, you have to demand transparency.
Like what specifically?
Okay, first, who actually holds the title? Really holds it. If you don't own that truck outright until the very last payment, you're still essentially leasing.
Right. Still vulnerable.
Second, look really closely at that convenient bundle of services. The classic lease purchase trap, the handcuffs, as they say,
Yeah.
is being forced to use their high-priced vendors, their fuel card, their specific repair network. You need the freedom to choose your own, maybe cheaper, repair shop.
Otherwise, that ownership is just, what, indentured servitude with extra steps?
Pretty much.
Okay.
And check for hidden balloon payments at the end, too. That promise of stability. It only counts if the terms aren't secretly designed to make you fail when rates inevitably dip.
Okay, so that's stability tied to the asset, the truck itself. Let's shift gears. What about stability built on just sheer performance, reliability?
Good point. Don Humber Trucking was recently recognized by FedEx, right?
That's right.
For really consistent high performance.
Yeah, things like on-time delivery, clear communication, safety record.
And this is significant because reliability, consistency, that's like the highest currency in trucking right now. This FedEx recognition, it's based on data, real proof of trust. It's not just some PR flyer.
And what does that trust mean in practical terms?
It signals lower risk to shippers. And in a tight market like this one, that trust, it translates directly into getting better, more consistent freight opportunities, stuff that other carriers, maybe less reliable ones, just can't get access to.
Okay, but here's the question. I know every driver is thinking immediately. A company wins an award like that for operational excellence.
Yeah.
The driver asks, cool, does this mean I get a raise? You know?
Yeah.
Because recognition is great for the company getting future contracts. But the stress, the effort, the long hours it takes for the driver to maintain that, say, 99% on-time metric, that needs to show up in a fatter, more stable paycheck. Respect has to translate into real dollars and cents.
That connects perfectly to some of the internal challenges the industry's grappling with, particularly around training and, well, fair pay. Stability really starts with having a well-prepared driver.
And right now, that foundation seems shaky.
It seems that way.
Oh.
The American Transportation Research Institute, ATRI, they're kind of the big research voice for large carriers. They're doing a major study right now. And they're basically asking, does current driver training actually help? Or could it be actively hurting the industry?
Wow. Hurting? How?
Well, some sources suggest the industry is often just producing steering wheel holders, not fully skilled truck drivers.
Ouch.
Yeah. Rookies get rushed through these CDL mills, maybe get the bare minimum, then they're thrown into really expensive equipment with very little real-world prep.
And what about the mentoring? The veteran driver's supposed to teach them.
That's another huge problem. Often those veterans are fantastic drivers, but they're not trained as teachers. Or, maybe worse, they're poorly compensated for taking on that huge responsibility of training someone new.
So bad training creates bad habits.
Exactly. And dangerous ones. When training fails, you see specific safety issues pop up again and again. Poor load securement, real difficulty with backing or navigating complex docks, not being prepared for the compliance paperwork.
All stuff that leads to early burnout, accidents, safety problems.
Right. So ATRI's goal is to finally try and link the length and the structure of training programs directly to real outcomes like long-term driver retention and actual on-road safety stats. It's about accountability for how we prepare people.
Okay, so if poor training corrodes things slowly, then non-payment is like an immediate explosion.
It's an existential threat, absolutely.
Yeah.
That situation that got a lot of attention at Truckers' Paradise down in Gainesville.
Yeah, where employees were saying they hadn't been paid for weeks.
Exactly. That incident just highlights who was often the least protected person in this whole ecosystem. The worker.
Non-payment, whether it's just, blatant mismanagement or maybe the company's own cash flow is terrible.
Right. Either way, it destroys the faith workers have in businesses that claim to support them. And if you ever find yourself in that horrible position,
What can you do?
self-defense is crucial. Document everything.
Yeah.
Save your schedules. Track all communication about pay. Know your options.
Like filing a wage complaint?
Yes, with the Department of Labor, you absolutely cannot afford to let your employer's chaos become your personal financial crisis. You have rights.
Okay, so if we look at the whole picture here, market volatility, regulatory chaos, these potentially tricky ownership pitches, subpar training, even the risk of not getting paid.
Yeah, it all seems to point back to one critical need, doesn't it?
Which is?
You have to build personal financial control outside of just the freight economy.
Okay, explain that. Because the cycle of high costs, low rates,
Yeah.
that's probably always going to be there in trucking to some extent, right?
Absolutely. It's cyclical. That's why this defense strategy that some advocates, like we mentioned, Hervey, are championing. It focuses on creating true independence by training truckers using their downtime to leverage digital tools, specifically things like AI.
Whoa, AI. Like coding in complex stuff.
No, not necessarily complex coding. We're talking about mastering AI tools for high-demand digital skills that you can do remotely.
Like what kind of skills?
Things like virtual assistant services, transcription, taking existing content and repurposing it online, maybe even digital logistics consulting using your industry knowledge.
Okay, so using your brain and some accessible tech, the goal is creating these like micro income streams.
Exactly. Streams of income that act as that financial shield we talked about earlier.
Shield against what?
Against everything we've discussed. When freight rates suddenly tank, when diesel spikes out of nowhere, or God forbid if your main trucking company suddenly folds.
That stable, recurring income from these other skills is there to protect your home, your family.
It's about leveraging your off-duty time wisely, not just managing your hours of service for the shipper's benefit, but managing your time for your future financial independence, building something for yourself.
That distinction feels really key. The empowerment comes from realizing you do have control over how you spend those off-duty hours. It's not just waiting for the next load.
Exactly. Building these digital skills, this side income, ensures the market doesn't dictate when or even how you retire.
It allows you to retire when you want to, because you've built diversified sources of stability, not just relying on the truck.
So to kind of wrap up our deep dive here, the key to surviving, maybe even thriving, in this industry today, it seems to lie in this complex awareness.
You mean understanding the market forces?
Yeah, questioning those ownership structures before you sign anything.
Demanding better standards from within the industry, like on training.
And most critically, proactively building your own financial defense system right now, using skills acquisition, diversification, building that shield.
Yeah, the whole trucking ecosystem, it's clearly struggling. Struggling to retain good people, struggling to compensate them fairly, as we see with the training gaps and the pay disputes.
It is. But individual drivers, you have the power to create your own safety net. Through knowledge, through applying new skills in your downtime.
So here's a final thought to leave you with. If the industry keeps struggling to train people properly and pay them fairly, how much longer can just pure hard work, driving endless miles, sustain real independence?
And maybe more importantly, what essential, maybe AI-powered skill could you start learning during your off-duty time, starting today, to make sure your paychecks finally stop, depending solely on whatever the next unpredictable spot rate happens to be?
Something to think about. Until next time on The Deep Dive.